Good afternoon, everybody. It is Wednesday, the 5th of February. Let's go ahead and get started by looking at the S&P 500. These markets have been quite volatile, and they continue to be. 2 Mondays in a row, we've had big gaps lower on news. Last week, it was DeepSeek. This week, of course, it was the tariffs. The tariffs so far are turning out to be nothing, but the market is still kind of skittish here as the market is kind of bracing for more Trump bombs on the tape that seem to wreak some havoc. But since Monday morning's low, let's take a look out on a shorter term time frame. We'll look at the 15-minute time frame here. We see a very clear pattern. We had that low, we had a high, and then the pattern has continued to be higher highs and higher lows. A little exception here yesterday, but now we're fighting with the 5-day moving average and the anchor off of the high on this 15-minute time frame. We'll go back and take a look at and frame it on the daily time frame, because here's where we see just a lot of volatility. And as I've been saying the last week or two, it reminds me of the phrase from George Soros that volatility peaks at turning points and diminishes with the trend. Now, that doesn't mean I'm calling a top. I'm not one to call a top. I'm one to call a top after it's already topped out and say, yeah, that was a top. When we look at the weekly chart of the SPY here, you can see that, if we're in a topping situation, we might be similar to where we were right here. So we had a test of, we'll just reference them in terms of colors, but we had this large uptrend with the blue above the green above the black, and then we saw a test of the green after touching the blue several times, and then back to touching the blue and bouncing from that. So maybe we're in a similar period as this. That is that if we're topping, it's going to take some time. I'm not looking for this market to just completely fall apart. But as a swing trader, and that's the time frame that I like to talk from, and so I'd like to frame all my thoughts around, yes, it fits into a giant longer-term uptrend, but from a swing trader's perspective, there is a lot of volatility here, and you've got to shrink your time frames during this type of volatility and look to finding the pockets of sanity out there, and really basically, when it comes to risk management, taking smaller share size. So the S&P 500 on the daily time frame, it's good to see that we're holding this thick blue line, which is the year-to-date anchor, and that's also where we see that orange anchor from the election. So to me, that's the key level in here at about 595. If we remain above 595, then I think we continue to make choppy upward progress. For the Nasdaq, we're still, same thing. We're seeing a lot of volatility here on this daily time frame. We saw that pattern of lower highs and lower lows, and now we have kind of just higher lows, but lower highs. So just a lot of volatility here today. Again, we're seeing this pattern of higher highs and higher lows. The Russell 2000 is right back up. So we saw a shakeout, but it's right back up to getting close to, that is, the anchor from the election, the 50-day moving average in this little band of resistance. If it were to break out beyond here, I would not look at this as necessarily bullish is going to follow through, because it's just expended a lot of energy getting here. Running from 221, it would have to go to 230. So I would want to see a higher low hold. That's what we were looking for last week as well, but we didn't see a higher low. Instead, we saw that shakeout. So it still needs, some work here. And the semiconductors, they remain really a mess. If you look at the daily chart, we are right at the year-to-date anchor, the thick blue line, the anchor from the election, and that thin blue line is the 50-day moving average. We have this prior band in here of support, which is maybe turning into resistance. I look at the semiconductors and just see a mess. And that mess is, made messier, of course, when we have big gaps lower in a key component like AMD. Now, AMD's gap lower is being bought up so far today, and that's a good thing. But the pattern still remains exactly what we were talking about last week, and what I've been talking about for the entire this year and much of last year, which is we have a pattern here, lower highs and lower lows, and that these are bounces within that. Now, if you're buying it and because you think it's the bottom, that's fine. Know where to set your stop. That's the key. And you set your entries based on shorter term time frames, like a 2-minute time frame. Now, we saw this kind of same thing yesterday with Palantir, in a lot of stocks, that a lot of times we see that, the first hour and a half will cross back and forth above and below the volume weighted average price, and then the buyers take control, and we have this little pattern intraday of higher highs and higher lows. Now we want to be aware that we're approaching the 2-day volume weighted average price, and that means it would be time for a short-term trader. Now is the time to be raising your stop. And if it does this, makes a little higher high here, your stop would go underneath this level for a day trader. Now, going back to the weekly time frame for AMD, it's still in this giant mess. And it's possible that it's making a bottom, but if it is, is it any different than these downtrends that we saw over here? In other words, you don't have to get in at the bottom to make money. Once we're above a flat to rising 200-day moving average, that's when officially the buyers are back in control. And that didn't happen until about $90 per share. It went 50%. And then really the buyers took control of the long-term trend. And then we had a beautiful uptrend for several years. So maybe it's going to take that much time as well for that 200-day moving average to flatten out. It maybe does something like this. And that's fine as long as you know what your time frame is. As a swing trader, I look at it and say, I'd rather be shorting the failures in here because the long-term trend is lower. Whereas a stock like Nvidia, we saw the second gap lower. Of course, the market is what got rocked based on the Nvidia after DeepSeek 2 weeks ago. So we see now that this week we're getting a nice bounce in Nvidia, and we have this pattern of higher highs and higher lows above Monday's volume weighted average price. So if you're buying it, let's say for a swing trade, I think your stop goes up underneath these higher lows, and you look at it and say, where does it have the potential to go? Maybe to the anchor from the August low, which is where we saw prior resistance. So maybe up in towards that 127, 127 and a half is where Nvidia has the potential to get going here. And that's where you can look at it and say, okay, maybe that's a time to start taking a look at if you are, to reduce some of your exposure if you bought it in here for a bounce, because it's going to take some time, I still think, to get beyond this bigger 130 level for Nvidia and the semiconductors. Again, they just remain a giant mess in here. When we look at the weekly chart of semiconductors, it's looking a lot like it did really over here, where, same story. When you look at market structure, what we typically see early on in a trend is the market bounces from the shorter term moving averages. As the trend becomes more mature, it's the longer term moving average, the 42-week, 200-day moving average that finds the buyers. Then we see those moving averages crisscross. And then if we start to see a pattern of lower highs and lower lows below here, then we will know that this was in fact a peak. We saw a failed break higher, now a fast move lower. The semiconductors are in the danger zone, I think. Doesn't mean they can't, so if we're right here in these semiconductors, it doesn't mean they can't do this. And believe me, I would prefer they do that. I would prefer that this is a correction through time that moves higher. I'm not calling this distribution. We'll know that it's distribution once it enters a decline. So when we're looking at market structure, you look at it and say, okay, we have this sideways action. After a decline, it typically means accumulation that's going to lead to an uptrend. After a big advance, we get sideways, that typically leads to a decline. Doesn't mean it has to lead to a decline, but that's what it typically does. So we want to look at it from that perspective and say, we're in a potential danger zone. Things, even if they break down here, doesn't mean they can't reverse either. But when we look at stocks like, let's say, Occidental Petroleum is one that I've been talking about, that it's clearly in a downtrend. It's been in a downtrend, and people have been buying it because Warren Buffett is a buyer of this stock. And if Warren Buffett wasn't a buyer, the stock would probably be in the 20s. But Occidental Petroleum on the weekly time frame continues to be in a downtrend. There are rallies within that downtrend, but The sum of the declines is greater than the sum of the rallies. That's just the simple math of a decline. So there's more opportunity on the downside in a declining market than there is the upside. That's just the simple math. That's how it goes lower. The sum of the declines is greater than the sum of the rallies. And when you consider that news and surprises tend to follow the direction of the trend, it tells us, one, the math doesn't work for us, so why try to buy these stocks in downtrends? And two, the news cycle typically doesn't work for us as well. So when we look at a stock like AMD, does it make sense to be a buyer in here? For traders, sure. If you want to fight the primary trend and get involved in these are great opportunities for day traders. But know what your time frame is when you get involved in these. Look at it and say, here's how I'm going to manage risk in a stock like AMD or whatever stock it is that you choose to trade each day. Some of the names that people are looking at, obviously, always include Tesla. Tesla continues to really just dance on this anchor from the election. And the anchor from the election has been an important inflection point because it represents the psychology of the average and the average price that the buyers have purchased since the election, but it also represents the average price the shorts are involved since the election. So right now, as I say, it's just kind of dancing on this anchor from the election. And if it fails in here, and the odds are becoming greater that it will fail, like any level of support, the more times that it's tested and the more frequency with which it's tested, the more likely it is to fail. We have this pattern here of lower highs. The lower highs means we're not, sellers aren't waiting for 465 to take control. Instead, they got more aggressive at 440, and they didn't wait for a bounce of 440 to take control. They took control at 420. So we're seeing this pattern. And, maybe we continue to see this pattern go sideways like this, and then maybe it tightens up, and we see another continuation higher as the 20-day moving average and 50-day moving average do this. That is certainly a possibility. Right now, though, when we look at the 30-minute time frame, we see this mess where we're below the year-to-date volume-weighted average price. We're below the anchor from the 2025 high. All, and those come together in 405. We just got rejected at the declining 5-day moving average. It tells me the sellers are getting more aggressive. The odds favor that we're going to see at least, I think, a shakeout, and maybe it just shakes out like this, then recovers. That would be the best thing for it, because the more times it keeps dancing on this, the more the less conviction that is that the buyers have in this area, and that means it's less likely that it will continue to get bounces in this area. Sorry, I was just looking for the chat so I can make it sure to look at the text, the tickers that you guys are interested in. So, a lot of times it's the same stocks week after week, and that's fine. For instance, Tesla is on that list. And I think that Tesla, again, you've got to just be very careful with Tesla here. It's had this massive run, since prior to the election. It rallied from 200 to 475. It's digesting that gain. Now, the healthiest thing it can do is for it to shake out, suck in short sellers, quick recovery, rebuild, and then continue to move higher. But until it does something like that, I think you're looking at a stock that here, this on the right, these are 30-minute bars, and this is from the beginning of the year. We've seen just a choppy mess. But don't fight the direction of the 5-day moving average is what I would tell you in there. So, Tesla is one that everyone always wants to look at. SMCI, I've been bearish on SMCI. Like I said, I think that it's likely to continue down towards here, and I'm not trading SMCI. It is just too crazy. I don't like the way this thing trades. It's making a pattern of lower highs and lower lows this year. That is clear. This is the beginning of the year. So from the beginning of this year, we're basically sure we're up on the year. This is where we closed out last year. But I see a pattern here of this big high, a lower high, and maybe another lower high. I see this low, a lower low, and another lower low. So that pattern will need to change. We'll need to see maybe a pullback like this where we hold above the year-to-date anchor, then perhaps SMCI can continue to move higher. But for now, you're just going to get blindsided. The longs are going to get blindsided by these overnight gaps lower, because structurally it's not in a position to sustain an upward movement. It has a declining 200-day moving averages. Rallies with a declining 200-day moving average typically fail. Don't shoot the messenger. That's just how it typically goes. So I think that SMCI, like I said, I have a bearish bias, but I'm not trading it because I don't like the personality of the stock. It's much too volatile for me. So I'm not going to get caught up in these gaps and that sort of thing. So, it doesn't have really much appeal for me in here. Reddit, let's take a look at Reddit, because Reddit has been a huge upside mover, and it continues to be so. So it's innocent until proven guilty. When I look at this, just when you look at stocks, make it the most simple you can. Here we saw some consolidation, tried to shake out. It shook out a little bit. It broke out to the upside, then shook them to the downside. And then from those failed moves comes this pattern of higher highs and higher lows. So with this pattern of higher highs and higher lows, the question is, look at this leg higher, look at this leg higher, and here we are in another leg higher. So if we take a look at, if we grab this bar and say that was the height of the first leg higher, this is the height of the second leg higher, and this is where we are. If we see similar legs higher, then how much upside potential do we have? Does this make a good long candidate here, considering that it's just rallied from 187 up to 217? So it's just rallied 10% off of these lows a couple days ago. Is that the best risk reward for a new purchase here? No. But if you're long, what you want to do is you want to say, okay, we saw this shakeout, we saw this pattern in here, and now this is our most recent relevant higher low. So I think that you don't chase a stock like this. You want to buy it after these, once it has these, similar types of rallies, you want to look for the pullbacks and buy strength after those pullbacks. So if you're long, you keep raising your stop up. You listen to the message of the market. Just like Palantir. I don't see that one on the list, but I'm surprised. I'm sure people are interested in it. Palantir right now, it just remains in this giant uptrend. And in the last 2 days, we're seeing just a little bit of profit taking after the gap up. So we saw that the sellers took control of it yesterday afternoon, just from an average standpoint of, hey, some profit taking since the earnings. That's all. And they defended it in here again. So there's residual sellers. We broke below the daily VWAP. And now in here, we're finding sellers at the daily VWAP today. And the bounces off the VWAP, we rallied up, broke down, sharp move lower, rallied up, broke down, and not as sharp a move. So you look at it and say, now's not the time to buy it yet on this pullback. Wait for something like this to occur in the next couple days. Let the range tighten up. Let the daily VWAP get above the 2-day. Buy the strength and then have your stop under whatever the pullback low is, because we don't know if this thing is going to go and close the gap. I don't think it is. The last several earnings gaps have not filled. So the people who tell you all gaps get filled, maybe eventually, but not in a time that it makes any difference to making money. This gap still hasn't been filled. This gap hasn't been filled. This gap hasn't get filled. Could you imagine being on the sidelines over here waiting to buy the stock because the gap at 24 didn't get filled? That doesn't make any sense. So don't listen to people that say all gaps get filled, because it doesn't make sense. So NXRT, I'm not familiar with this symbol. Let's take a look at this. And the first thing I see on the daily time frame is that we are below that green 50-day moving average. We're below the anchor from the election. And while we're holding on last year's anchor, we're just kind of turning sideways in here. So I look at this and I see just kind of a mess. Now, next, residential trust, most likely it pays a dividend, so it's 4.2%. So it's a REIT. You can tell that because it's residential trust. So when we look at the anchor from the all-time high, let's look at that on the weekly time frame. We tried to, I look at it and see, this is what a double top is. This is point A, point B, point C. So a double top is complete when two things happens. It breaks the uptrend line, and then it breaks point B. So again, this is point A, this is point B, and this is point C. So when it breaks a double top, what we look at is what's the height of this pattern. So we can say 48 to 40, let's call it 42, so 6 points. So what we look for is from that 42 break, we subtract 6 points, and we look for a move down towards 36. I see this stock as, kind of broken. You have this prior band of support in here, which has the potential to become resistance. Definitely not a stock that I think is, makes a lot of sense right here, right now. The average daily volume is only 92,000 shares. I shouldn't even be looking at this. I really don't like to look at stocks unless they trade a 20-day average volume of at least 500,000 shares. I don't care about market cap the way some people do. I care about liquidity. And the liquidity in this one really just isn't very good. So on to the next one, which would be KULR, which it's in this profit taking. It's trying to find support at the anchor from the election, and this has been a key level for it. So it's finding buyers in here, and the best thing could happen is if that was a lower low. It hasn't done that. It's still undergoing pressure. So you're likely to see in a stock like this, you're likely to see just out of the blue some news come up, and it's going to get a spike, and then it'll probably trickle back down. And if there's anything to this company fundamentally, it'll have to rebuild and do this, and then be a buyer over here. But most likely, this is a stock that reported news that maybe was in a hot group. You look at the prior history of the stock, and you look at similar types of moves and what's happened with this stock after similar types of moves, it doesn't help build confidence that this thing is going to go back to these highs. Now, maybe there's something here fundamentally. I don't know anything about the company, but right now I see a stock that's neutral at best, trying to find buyers, but really I can't see a reason to be a buyer of it right now. If I were looking at it, this is what I'd be looking for. If you get a nice rally to it, in it like this, it'll probably fail. It'll come down. And then if it makes a higher low, then maybe it's going to set itself back up for some upside. Roblox, I think that this one reports earnings next week, or not till the 27th. So that's good. The weekly chart of Roblox, that's why I typed in the wrong symbol. Yes, February 6th. So they report earnings tomorrow. So it's, here again, look at market structure. This was the anchor from the IPO and from the all-time high. This is where officially buyers gain control. I know a lot of people who wasted a lot of time in this zone looking for the stock to break out. This is where officially the buyers, the institutions said, we're taking control of this stock. The prior band of resistance was tested. It broke out. Resistance was tested, so it broke out here. Resistance was tested, held as support, and now we're seeing a really giant rally. So I would be a little bit careful with this one, because with earnings due tomorrow, this could be a case of buy the rumor, sell the news. Yes, it's very strong, but from going from 64 to 74, that's, what is that, 14% or so from those lows. It's in a great uptrend, so you have to ask yourself, are you comfortable holding through earnings? Or, are you, going to look at it, and get Googled? Google was in a beautiful uptrend, and then look what happened to it. And that's Google. So Roblox, do you think it's going to hold? I don't know. I have no, care about Roblox in particular. But if you see it pull back, I think these are the levels of interest on the downside, the anchor from the beginning of this move. And then if it really were to get hit, I think you look at this level, 68-ish, and then the year-to-date anchor. So those are the levels of interest I would be at on the side, on the downside. In order for this thing to, surprise to the upside and gap higher and continue this move, I think it's asking a lot. That's me. I would be nervous holding this because it's had such a big run in front of it. I'd be thinking that this has the potential that buy the rumor, sell the news in Roblox. So I would just say be careful with it. Cava, beautiful recovery right off the anchor, off of this April low. And, it's getting extended as well. So I think that, do you want to chase this stock? I don't want to. If it can maybe find support in here at the anchor from the election, for the next move higher, that's good. I look at it and say, where has it come from? It's just rallied, from 128 to 142. That's 10%. So I'd be looking for a pullback and then to buy strength after it. Buy strength, over here, which would be similar to buying strength after here. Earnings are due on the 24th for this one, so that's still a ways off. Lunar is, I think somebody downgraded them today. Maybe that's what it is. Lunar, I'd say be careful with Lunar and with Rocket Lab. They've had massive runs. I mean, Lunar just 6 months ago was a $2.50 stock. It's gone up tenfold in that period of time. Doesn't mean it can't continue to move higher, but it's getting stretched here. Year to date, we're starting to see now that we have this has been support at the year to date anchor. Now we keep probing it and breaking it. This is the longest it's spent below it since over here. So I think you could be in for a little bit of profit taking. It might be time for a move here in the next few week or so for a test of the 50-day moving average, which hasn't been tested since this breakout in August. It wouldn't be unusual to see a pullback to the 50-day moving average. In fact, it would be quite normal to see a pullback down towards that level. So, that's where is the 50-day moving average right now? It's at $17.15. So that's $2.50. That's a 10%. I think that it's likely that you're going to see it do that. So if it gets stuck below here and starts looking like this on the shorter term time frame, a declining 5-day moving average and stuck below the year-to-date anchor, I think that you're probably going to see a test of the 50-day moving average in a stock like Lunar. BB Blackberry, beautiful uptrend. Again, if you want to buy this stock from a swing trader's perspective, which again is what I am, I'm a swing trader. I ask myself, where has it come from? $4.15 to $4.85. It just rallied 70 cents. That's, 18% in the last couple days, and it had been finding buyers right along the year-to-date anchor. Notice how the year-to-date anchor in here and a rising 5-day moving average. So, from a swing trader's perspective, I think you need to see it, start to do something like this and then be a buyer. If you're looking at buying this today, then it tells me you're either a day trader or, you've got to have really tight risk management. The buyers, yesterday, we saw a gap up. We had a little shakeout below the VWAP. Then they defended it in the afternoon. We saw a continuation higher. Today we gapped up. We're holding VWAP. So I think that if we start to see some pressure at the VWAP and it does this, then I think a pullback to the 2-day VWAP might begin a new correction. Similar to, getting back above the daily VWAP for Google today. Buyers are seeing a little bit of a bounce in here. AMD is getting a bounce. And this is exactly what we spoke about. So in AMD, if you were looking at this as a day trade, it came from this band of consolidation, then a pattern of higher highs and higher lows. You look and say it has the potential to see sellers at the 2-day VWAP, which in this case is blue. It nailed it to the effing penny. You just cannot make that up. And then what happened? It broke a lower low. Now, it doesn't mean it's dead, but it means to me that, one, if you were long, you should take your profit. Two, if you're looking to short, your stop goes above here. So if we start to see this happen, then I would say it's likely we're going to see another test of the daily VWAP, and your risk at this point is just above this right here. So here we are at the end of our session. Let's take a quick look at the financial stocks because they've been the leaders. As I always say, when you see a market that breaks out from an extended level, these guys rallied from 47 to 51.5, that you become defensive. You raise your stop up under the higher low, and now we're stuck below that 5-day moving average, but holding above the weekly VWAP. So, maybe these go sideways, but if you're in the financials and they start to do something like this, then I think you're in for maybe a little bit deeper correction. And that's not a bad thing. It's had a nice run. Stocks don't just go straight up into the sky without corrections. So That'll do it for me, everybody. Thank you for tuning in. I will be here again next Wednesday. And if you want my daily analysis, you could sign up on Twitter for just $10 a month. And I do a midday video. I do an end of day video. And coming up here soon, in the next week or two, I believe, is the next subscriber webinar, where the focus of that, each month I do a webinar that's focused on education. So again, thanks for tuning in, everybody. Have a good day, and I'll talk to you again next week. Goodbye.